Dixon, what a quarter.
Yeah, seriously, what a quarter. And Saurabh Gupta, CFO of the company Johnson right now to talk about the quarter and the outlook ahead. Saurabh, good having you. Thanks for joining in.
Hi, good morning,
Uh,
good morning, both. Good
and,
morning.
and how do you characterize the quarter, Saurabh? Because I would look at it as a glass slightly more than half full because the revenue numbers were rock solid. What went behind the quarter?
Yeah, so clearly, I think so. We think it's a good set of numbers. Clearly, what we had planned for this quarter, we have slightly bettered or overachieved those numbers against the budgets that we had made for this quarter. So clearly, mobile is doing very well. We have been able to have a large set of customers on the Android ecosystem. Our acquisition of iSmartU, which happened during mid of August, has also been playing out. We are looking for some more customer additions in this category. We are looking to deepening the level of manufacturing by getting into displays, precision components, and mechanicals. And then the IT hardware by next financial year should start delivering. We already have tied up with some of the large global brands in IT hardware. Yeah, so overall, yeah, we're sitting on a good opportunity, and all of that has come by still maintaining a very strong balance sheet. So my sense is, yeah, we are sitting on a good opportunity right now, and things look so very, very exciting and positive right now.
So what doesn't surprise is this ramp up in mobile volumes because you've spoken about how the focus is so strong there, but the ramp up was strong and very sharp is the term that some analysts have used. Is this the nature of things to come, or have you kind of preponed some of that production to take advantage of festive demand that your clients might have wanted? Give us a fill on that.
No, I think so. It has panned out that's exactly what we had thought. In fact, it will only get better from here because one of the customer additions we start manufacturing from November onwards, and we are looking for even a large brand, which should hopefully happen in next couple of quarters. So by next financial year, yes, the volumes can be potentially even better because some of the brands that we just started in this financial year would also get ramped up and would also have full year numbers for next year. Yeah, and then our piece on the backward integration where we have tied up with HKC, which is the largest global company on the open cell and display manufacturing. That number should start coming in from the next half of the financial year, H2 of the financial year. And that would really add a lot of competitive strength more to our business, add to our margins because all this backward integration play, whether it's display and then our future strategy on precision components, mechanicals, die cuts, would significantly boost our margins in mobile, which is the largest play. So one, you will have the revenue growing, and then on top of it, the margin expansion can potentially happen in that category.
Okay, that's first. Second, I'm sticking to the top line first, and then I'll go to the operational metrics. When washing machine volumes, the industry trend is very soft, but you've seen continued strength there. Similarly for refrigerators, right? You've had higher capacity utilization, announcement of further capacities. What's going behind this? More customer additions, or is there something else, Saurabh, for working for you?
Yeah, so washing machine, as far as the two categories are concerned, semi-automatic, we have already taken a large market share. We continue to add customers, but that number has now gone to a single digit kind of a growth in terms of volumes. Of course, we keep doing better in terms of margins because of the operating leverage, because of a lot of work that we are doing on value engineering, on our cost optimization. But the fully automatic, which was slightly took us more time to stabilize, there the volume growth has been slightly better. So we have seen a 50% growth in the volumes against in this quarter against last year. And refrigerators, yeah, refrigerators to our surprise, we were able to ramp up and clock a volumes of almost 80-90,000 within a very short period of time. Clearly, I think so. Refrigerators, we were able to acquire large marquee clients within a short time. And there now the visibility is to actually expand into other categories of frost freeze, side by side, 100 liters. And we further expand our capacities in red cool. So that business also is looking quite promising. Yeah, and then the IT hardware next year should really be the next trigger of a growth after mobiles.
In fact, yeah, so talk to us a bit about that as well, because almost all notes seem to suggest that the components piece will improve the profitability. You've apparently sounded confident that the first phase of the HKC JV display facility will also get absorbed and all of those factors. So talk to us a bit about this.
About what?
The components piece, right? Right.
Yes, component. Yeah. So component, if you look at the total value addition in mobiles is presently 16-17%. Now we are targeting to add displays, which will add another 8 to 10% to the value addition. And the precision components, mechanicals, where we are actively pursuing some partnerships, and also the die cuts should add another 7, 8%. So the idea is to go to around 35% in the next couple of years. So if you look at any mobile phone, almost 50% of the bill of material is semiconductors. So we are targeting the non-semiconductor portion, which is the balance 45-50%, and we want to have a large play in that non-semiconductor portion. So that would really add to our strength, the moat in the business. It will expand our margins, and it will really enhance our stickiness with the consumers as well.
Could this, I mean, aside of the valuations being, I'm not asking you to comment on the stock, Saurabh, but I'm using that as a crutch to ask my final question. That the reaction to the very good set of numbers largely has been slightly negative right now. Could the margins be the reason why that has happened? And you've been speaking about the fact that because as you focus a lot more on mobiles, maybe the margins come off a little bit, but the top line growth continues. So tell us a bit about it, because in this interview, twice you've told me that you're looking at better margins. We've seen a 30 basis point slide in margins YOY. What's the outlook for the second half or for the year at large?
Yeah, so absolutely, I would say that the margins, the margins, if you look at as in its absolute, I think so. The margins will be around 3.7, 3.8% as compared to maybe slightly higher than what we had thought. But my sense is another 12, 15 months, once the backward integration play starts to reflect in the numbers of mobiles, then you will see a significant margin expansion. It can potentially expand by almost 100 bips from the current levels, or slightly higher than that. So my sense is another 2 years it will take us to completely ramp up and stabilize the backward integration play. So FY27 we'll see a significant margin expansion, but you will start seeing that margin expansion from in the next half of in H2 of the next financial year. So my sense is, one, apart from the margins, one should look at the absolute growth in EBITDA and profitability. And all of that is coming not at the expense of compromising on the balance sheet, free cash flow, or the ROC. So ROCs continue to expand. So in the last 1 year, we've expanded the ROCs from 30% to 38.9%. And we feel that given the asset turns in both mobile and IT hardware business, and also strong margins in backward integration, the ROC profile can continue to expand. So that is
Continue to expand. Where do you want to take it to, Saurabh? Or where do you believe it could go to? Let's say 2 years, 3 years out.
Yeah, I am very confident that in next 12, 15 months, it can be as anywhere in the range of 42 to 44%. So it should further expand, because even IT hardware is a very high asset turn business. And yeah, you really need to manage your working capital, which we have been doing well on that thing so far.
Saurabh, I'm completely out of time on the show, but I have to ask you this one question, 60-second answer. You are already a large or the largest market share in a ton of categories. How do you grow on this base? Do you add more consumers or more product lines? 60-second answer, Saurabh.
So more product lines, more categories within that same category. Exports, we think we are very now becoming globally competitive in certain categories of exports. So exports will play a major role. And we'll continue to add more categories around our core of electronics, or more product categories. So the balance sheet is strong. Wherever there is a possibility that we can generate operating leverage, create a large scale, and it's linked to electronics, we'll definitely look at it very seriously.
Well, all the best for these plans and more, Saurabh. Good quarter. Thanks so much. So congrats on that. Thanks so much for joining us, to you and yours. Very happy festive season.
Thank you, and happy Diwali to you and everybody. Thank you.
Thank you so much.